Would you like to get approved for a low interest rate, long-term, high dollar amount SBA loan? Well, I'm about to reveal to you everything you need to know to get an SBA loan to start and grow your business. So during this training, I'm going to teach you about over 10 types of SBA loans you can get now. I'm going to show you how to get an SBA loan even if you're just starting your business. I'm going to show you the exact qualifications SBA has that you need to meet in order to get approved. We're even going to look at the secret credit score that SBA uses to approve you, and I'm going to teach you exactly what you need to do to get a high score so you can make sure that you have the best chance of getting approved. I'm going to teach you how to get a lot of money with really low payments, teach you how to get approved even if you don't think you can qualify for it now, and I'm also going to get you access to our funding vault if you stick around to the end of this training with 27 other ways that you're able to get money for your business. And along the way through this training, I'm going to sprinkle in my best tips, my best tactics to help you get the most money at the best terms. Whew, that's a lot to cover. Let's dive in and get started. SBA loans are the most coveted type of loan a business owner can get. And there's a reason for that. Because the terms are long, 15, 20 years, sometimes even longer. The interest rates are low. So what that means is it means you can get a really low payment on a loan. And because interest rates are low, you can also get a really low payment on a credit line as well. Now, SBA does not lend money. A lot of people think SBA does. But typically, most money, except for one program we'll talk about during this training, comes from the big banks. So Bank of America, Wells Fargo, Chase, they're the ones that actually issue loans, and SBA guarantees those loans in case of default. So let me give you an example. Let's say you get a $100,000 loan from Bank of America. Well, first of all, Bank of America wouldn't even lend you the money because it's so risky to lend small business owners money unless they actually had that money secured or guaranteed by SBA. So Bank of America gives you the loan. They know SBA is guaranteeing, let's say, 70% of the loan. Well, if you ever default on that $100,000 loan, SBA would then give Bank of America 70% or $70,000 of that $100,000. So this makes it very low risk for these big banks to lend you money, and that's why it's even available for you to get money from the big banks. Now, there's three main types of SBA loans you need to know about. We're going to cover all of them in this training. The first is called 7A, the most popular and common type of SBA loan. There's actually 9 types of 7A loans we're going to dive in and talk about. There's a 504 loan, and we'll talk about that too. It has a very specific purpose. And there are micro loans you can get even as a new business. I mean, most entrepreneurs don't even know anything about micro loans. So let's dive in and get started by talking about 7A loans. SBA 7A loans are the most common and popular type of SBA loan. And the reason for that is that they're used for working capital. Now, working capital just means that you can use them for like any purpose. You can use them for hiring, you can use them for payroll, you can use them for marketing or expansion. Most business purposes you can use an SBA loan for. Now, there's actually 9 different kinds of SBA 7A loans. Most business owners don't even know about like 7 of these 9, so let's dive into them. So first of all, you have like a standard SBA 7A loan. This is a loan you can get up to $5 million. Now, they also have what's called a small loan, which is a loan that you can get up to $350,000. And they also have what's called the SBA Express, and this is a loan you can actually get from SBA in as little as 72 hours. So in 3 days, you can get this loan, and it also goes up to $350,000. Now, you can also get loan if you're in the exporting business. There's 2 different types of financing SBA offers for exporting. One's up to $5 million, one's up to $500,000. There's another type of SBA financing you can get for international business, international trade. So if you're doing business internationally, that might be the program for you. They also have a preferred program, which is only available through their preferred lenders, and you can also get SBA Cap Lines. And this is what they call their umbrella credit line program. And there's 4 different types of cap lines you can get. So let's dive into those right now. Cap lines is the name that SBA gives to their credit lines, and it's all basically under like one umbrella program that these 4 different types of credit lines are under. So first of all, we look at a seasonal line. Now, this is for seasonal businesses, and it's basically designed to help you pay expenses like in your down season when sales are slower. Then you have a contract line, and that really has to do with paying the finances and the actual direct labor cost for assignable contracts. There's a builder's line as well, and that's really for construction companies and builders that are basically paying like contractors and subcontractors. Then there's a working line, and this is what's used for most small business owners because it's just working capital. Again, as we talked about, that means you could use it for most general purposes. So those are the 4 common credit lines that SBA offers. And then the last type of financing under the 7A program is Veterans Program, and it's specifically designed for military veterans, for active duty military veterans and spouses of active duty and military veterans, as well as reservists. So those are the 9 programs and the 4 credit lines that's under one of those 9 categories of SBA 7 loans. Now, let's talk about outside of 7A loans. Let's talk about the next program that's most popular with SBA, which are called 504 loans. The second type of financing SBA offers, and also the second most popular type, are called 504 loans. Now, these are specifically designed for the purchase or refinance of fixed assets. Now, per SBA, fixed assets include things like land or buildings, whether it be an existing building or a new facility you're putting together. It can also include machinery and equipment. It can also include like landscaping and streets and parking lots and utilities. So if you have a fixed asset or are looking to buy or refinance, that's exactly what SBA 504 loans will do for you. Now, let's take a dive into the third and last and little known about type of SBA funding, which are called micro loans. Now, micro loans are offered through SBA intermediaries, and these are basically nonprofit organizations that offer them. There's a reason the big banks don't want to, because they can't make any money on them. Micro loans are just what they sound like. They're small business loans. As a matter of fact, they're typically capped at about $50,000 or less, and because the interest rate's so low and their loan amount's so small, big banks really can't make a lot of money on these. So they're offered through these nonprofit intermediaries that you can get approved with. Now, you don't have to have great credit to get approved, and even as a newer business, you can still get microloans. And this is a program that most entrepreneurs don't even realize that SBA offers, because they're offered through those intermediaries and they're not available through the big banks that you typically may go to. So now you know about the 3 main types of SBA loans that will give you low interest rates, long terms, and really low payments, and can get you funding as high as $5 million. Now that you know about SBA's loan programs, let's talk a little bit more about exactly what it takes to get approved. So there's 3 main things that SBA is looking at to approve you for an SBA loan. The first is credit. They want you to have good personal credit, typically 680, 700 FICO scores or higher, and you need to have established business credit. To qualify for an SBA loan, they will pull a FICO SBSS score, or FICO Small Business Score. And SBSS pulls in consumer and commercial credit into one score. Now, the great news is, even if your consumer credit's not great, but your business credit is established and it's good, they typically weigh business credit higher into the FICO SBSS score equation than consumer credit. So having really good business credit can help offset your consumer credit not being as good. Now, the other thing that SBA wants you to have is consistent income or consistent revenue in the business. They're going to get 3 years worth of tax returns. They're going to want to see that your income or your revenue is climbing year after year. They're also going to want to see that it's actually showing some kind of profit. You've got some kind of profit on those tax returns. And the third and final piece is they typically want you to have an asset that you can pledge as collateral that's equal to the loan amount, the amount that you're borrowing, or more. So a lot of things can work: account receivables, equipment, inventory. They'll even look at personal assets like your home, stocks, bonds, or IRAs. But the important thing is that they're going to want an asset or assets that are equal to the amount you're borrowing or more. If you have those 3 things, collateral, if you have the cash flow and good personal credit, you can qualify for SBA financing. Now that you know about SBA loans, you want to take the steps to get approved, or maybe you heard the qualifications and don't think there's a good chance that you're going to qualify now. Well, let me give you a couple options and solutions to make sure you can get the money that you need. First of all, make sure you contact us for a free business credit funding consultation. On that consultation, we'll help you get your credit reports with the business credit reporting agencies at no cost. They'll cost you $249 from Dun & Bradstreet, Equifax, Experian, but if you schedule a consultation with us, we'll get them for you for free. We'll give you tips and tactics to help you establish your business credit. Now, we'll also do a fundability assessment. We'll look at all the things that are wrong with your fundability that need to be fixed so you can get the most money for your business. And we'll do a funding qualification for you. So we'll talk to you about qualifying for an SBA loan and all types of other solutions that can work for you that are way easier to get approved for than SBA loans and credit lines. So to schedule that consultation, give us a call at 877-600-2487. That's 877-600-2487. You can email us info@creditsuite.com, or you can schedule your consult online at creditsuite.com/consult. And don't forget to grab our funding vault of 27 total ways you can get money for your business, all of which are way easier to qualify for than SBA financing. You can grab that at creditsuite.com/27 ways. That's creditsuite.com/27 ways. And if you like this, then please like and subscribe to get more training from us on cool ways to get the most money at the best terms to start and grow your business.